Welcome everybody to the new episode of Market Decoded by Phileas Prop Firm. I'm your host William, and for this week I hope everyone had a great and warm Thanksgiving with their family and the people they care about. As always, I'm happy to have Jay as my guest today for the market analysis. Welcome Jay, and how are you doing?
I'm fine, and you? I'd like to wish everyone a joyful and a warm Thanksgiving.
I'm very good, thank you. And it's always my pleasure to have you on. So, we've been off for 2 weeks now, and the markets had some wild swings. So, let's start with the stock market. What has been happening for the past weeks, and what is the current environment for the US stock market?
Yes, that's correct. We have a wild swing this week. Global stock market are reacting positively as bets on potential interest rate cut by the Federal Reserves have increased. Investor and money market are pricing in more than 80% chance of a quarter point rate cut in December and leaning towards three more in 2026, especially with Kevin Asset emerging as a leading candidate for the Fed chairman role. And Asset aligns with President Trump preference for lower rates. This has clearly improved sentiment.
Okay, so this new positive sentiment for the markets is largely driven by the new potential candidates for the Fed chairman role. And this enabled the rally that we saw for this Thanksgiving week, which, as we know, and we talked about it in previous episodes about seasonality. We know that the Thanksgiving week is usually for the past few years outperforming week, which is where we see usually some rallies in stocks. So this was not surprising. If you want to start trading futures without risking your own capital and get funded with the best trading conditions, join Phileas Prop Firm by clicking the first link in the description below and use the code PPYT at checkout to get the best discount available. Let's get back to the market analysis. So now let's move to the metals and the gold market.
Yes, so gold and also silver have indeed enjoyed a strong performances this week. The rally is largely driven by expectation of monetary policy easing from central banks, not just the Fed, but other central banks too. And regarding silver, it is very interesting on silver what is going on. Faces a risk from failing Chinese stockpiles. That's why we have this rally right now on silver, and I think we could have more rally in the coming weeks on silver.
And are we still having some strong buy from the central banks in China?
Yes, mainly regarding gold and regarding silver, it's mainly a shortage which is starting right now in China, and that's why I guess if you do spread trading, you can take position on silver versus gold. Could be interesting in the coming weeks.
Okay, so we'll follow that up. So gold is strengthening up, and what happened to the currencies? The dollar, what's happening?
The dollar has been under pressure due to expectations for interest rate cuts, which has created sensitivity among all currencies pairs. In the meantime, the British pound has gained some traction because of dollar weakness, but also improvement in sentiment about UK fiscal policy, while the Japanese yen has slipped to 9-month low again, influenced by a growing interest rate gap between US and Japan. And Japanese officials have shown concern and hinted a potential intervention to support the currency amidst the rising import costs. So we must keep an eye. I think it's imminent. The intervention from the Japanese authorities is imminent.
Yeah, so we've been talking about it for a few weeks now, and I think it's a good time to have some yen charts up and be on the lookout for the BOJ intervention because it will provide some very good opportunities on the yen. Let's now move to the oil market, which has maybe been less interesting for the past few weeks. So, what's going on with oil, and are we going to hit a new low next week?
Oil prices have seen considerable fluctuation this week. Prices stabilized near a 1-month low due to oversupply concern from OPEC decisions and increased position from non-member countries also. The market is preparing for a potential 4 consecutive monthly loss. Also, optimism surrounding a peace deal in Ukraine could influence future prices, but geopolitical tensions remain a significant factor on oil. So, and regarding the peace deal, I think we should be cautious.
So, what could we expect on the oil price if the agreement is signed and the peace deal is done?
If the deal is done and all parties are agreed to have this deal, oil could fall sharply because of oversupply. So it's not a good news for oil, but it's a good.
Okay, so very important to keep an eye on, even if it's not done yet. Let's now look out for next week. What are we expecting for next week? Are we set up for the Santa rally for December? Because Monday will be the first day of December. Are we going to have a massive rally until Christmas? And so, what's up for next week, Jay?
Okay, in short term, a further decline in US stocks is possible with economic data to be published next week, but this could create an interesting buying opportunity. For December, the current pullback is likely temporary, and the rebound is historically expected during this month. We talk about seasonality, and as you know, December is a good month for stocks. Looking at the medium terms on economic sides, the outlook in US remains positive due to strong economic indicator, healthy fundamentals, and investor positioning that is not excessive. We have a slowdown on consumer spendings in US, but I think it's the Fed is going to open the window for more accommodative policies. The main risk to watch for is a short squeeze from hedge funds because they are currently short and they are expecting the Fed to be more hawkish. And if the Fed is accommodative and more than what the market is currently expecting, we could have an important short squeeze in the hedge fund community.
Okay, and for the traders who are listening to us, so what will be the impact of such a short squeeze?
A short squeeze on stocks could give fuel, more fuel on December rally.
Okay, so be ready for an even stronger rally than we might actually expect if the short squeeze actually happen. So to recap, the news economics very important for the next week, the short squeeze to be looking out for, and the evolution of the expectation for the next rate cut. So let's now move to the trader's favorite segment, the tips from the professional trader. What do you have for us, Jay?
One thing important, because I see some people asking this question usually when they are trading futures. One thing is very important is that futures are derivative products influenced by external factors that you cannot disregard in your trading. So it's very important even for a future trader to look at stocks, options, and other financial vehicles.
Okay, so for someone who is, let's say, trading Nasdaq, a lot of our audience is trading Nasdaq. What would you recommend to look out as a chart on the side, maybe, or what would you advise?
The Nasdaq future is a derivative for the index. You have to look also on options, but also on stocks, on tech stocks, because the weight of tech stocks on the index is very important. So you cannot just look at your chart on Nasdaq future and consider that you can take position.
Mm-hmm. Yeah, it's very important to have the entire picture with all those stocks to understand actually what's going on and not getting trapped.
More than that, people have to understand that future contracts are mainly used in delta hedging. If you are buying options, for example, your market maker is going to sell future or to buy future depending on your side, and you have to clearly understand what is going on in the market behind the scene.
Mm. So what you're saying basically is that yeah, a lot of like volume that we see in futures are mainly for delta hedging, and so it's important to understand actually what it means, and it might not be just someone positioning themselves for like directional moves. Most of it is actually just hedging. right?
Indeed, as you said, when you take the picture of what is going on your futures, absolutely, you cannot think that what is going on the future is a directional move from a market maker, for example. You have to understand that sometimes he has to hedge, not sometimes, but every time, he has to hedge position coming from option from its clients. And while you are buying or selling futures, you are in the meantime taking position with or against the market maker. So you have to understand options in order to have a better understanding of what is going on.
Okay, so very good tip, and I think it's very useful to everyone trading futures to understand options and how can they actually start learning options and maybe get better understanding of what's going on in the market.
Obviously, your client can find free sources on the internet to understand all derivatives. And we also provide listen on our Discord if they want to join and understand all the picture of what is going on in all derivative industries.
Okay, so you'll find all the links for J services directly in the description. So thank you very much for this market analysis and the market outlook for the coming week. And if you want to get funded with the best trading conditions, join Phileas Prop Firm by clicking the first link in the description below and use the code PPYT at checkout to get the best discount available. I'll leave you with the last word as always, Jay.
It was a real pleasure. Thank you for your engaging question. Sorry, I'm a little bit tired this week, and have a good weekend.
Thank you, everyone. And thank you, Jay. And have a good trading week. Trade safely. See you.